Good afternoon, everyone. Time for this week's silver update. This is the weekly chart of silver, and I've drawn a number of lines in here. First of all, the primary trend line that we're rising along. The second line here is the primary support line that if we fall from where we are right now, we will be testing. I don't expect us to get down to this support line because you can see we're going to have to penetrate the primary trend line before we get there. So our test is going to have to be around $25. You can see we're still rising at a fairly decent clip. The last time we came down towards this line, if we would have tested it, you can see that it would have occurred around $23 or so. $23 to $24. Now if we get a test of this, we're going to be closer to $25. So it is a fairly rapidly rising trend line. Of course, nothing like this line that we had here, this tremendous spike. And we will get these in the future once the patterns consolidate. But that's in the future. Now, this other line I've drawn here, this is the bounce I expect it to take. I don't know if it's going to take it from here, or it's actually going to go all the way down to here and bounce back up. This other line here, this is the line that the people who discourage you from buying silver would like you to think it's going to take. I don't think it's going to take that line. Of course, if it did, and we saw something like the 22 price, or we saw something like even below the $17 price, or if this completely broke down and we're down here in the 15 or even $10, some people say single digits. If that happened, of course, that would be the best buying opportunity in the history of the world. So you've got to be certain of the facts and have them settled in your mind to be able to buy at times like that, and especially with the discouraging price action. And we're going to get to that when we get to the main topic. I wanted to thank NetDania for these charts. You can find the link below. So let's jump over to an article I want to read as a precursor to the main topic of the night, and this is an article, the recent one by Jason Hommel. The main reason I'm reading this article is just to lay out the facts of how many dollars are out there and how much metal is out there, and that's going to be the key issue that you have to keep in mind when we get to the main topic, which is mind control. So let's first look at how much metal is out there and how many dollars are out there. And Jason always does a very good job of laying that out, and he always has a very interesting perspective. So we're going to read this. You will often read how various experts in the financial press will say that the gold price should be about $2,000 an ounce to $3,000 an ounce or slightly higher. But what they almost never say is how they arrived at their figures and what assumptions they are making. The reality is that the gold price today, given today's conditions, should be about what it is right now. But conditions are likely to change, and change dramatically, and can change very quickly. The conditions that are mostly likely to change the most quickly are people's perceptions and understanding of the reality of the dangers of theft due to inflation. The U.S. federal government is spending about $1.6 trillion more than they take in from taxes, which is $1,600 billion, which is 1.6 million. $1.6 trillion. The news on TV this morning said that the U.S. national debt increased by $400 billion in the last 3 months, which confirms the numbers. They're not able to fix this problem anytime soon. This problem could not be fixed even if they taxed incomes at rates of 100% per year. And they are mostly just printing this money, which creates inflation. This means that prices will go up for everything, including and especially for silver and gold. Today, very few people in the USA understand that they need silver and gold, and that is likely to change. And historically, those kinds of attitude changes happen very quickly. which result in dramatic and very sudden increases in the prices of silver and gold. Today in the USA, only about $3.5 billion is being spent annually on silver, estimated at 100 million ounces times $35. And only about $3.4 billion is being spent annually on physical gold, an estimated 2 million ounces at about $1,700, for a total of only about $7 billion spent on precious metals to protect itself from inflation. But the USA has about $18 trillion of cash savings. Cash, savings, and short-term bonds in the banking system, which can also be expressed as 18,000 billion or 18 million million. That's $18 trillion, and that's 18 with 12 zeros. So mathematically, the reality is that new money creation is about 1,600 billion out of 18,000 billion, which is an annual increase of nearly 9%, and yet only $7 billion out of the 1,600 billion of new money creation is being spent on precious metals, which is only 0.4%, or expressed another way, is only $1 out of every $229 of newly created money being spent on silver and gold, and only $1 out of every $2,571 of money in the banks is being spent on silver and gold, which is only 4% of 1%. So currently, this is next to nothing compared to the avalanche of money that is going to be spent on silver and gold. So we could ask ourselves the following questions. 1. What is likely to happen to the gold price in the event that 1% of money in the USA were to be spent on gold and silver in a year? 2. What if 10% of the money in the USA were spent on gold and silver in a year? 3. What if 10% of the money in the world were spent on gold and silver in a year? 4. What if 100% of all paper money were spent on gold and silver in a year? 5. What if 100% of U.S. paper money had to be backed by all official U.S. gold? And 6. What if 100% of U.S. paper money had to be backed by all the U.S. gold that the U.S. government is likely to have left? See, the gold price will be dramatically different given the different assumptions as follows. First question, what if 1% of money in the USA were spent on gold and silver in a year? Money in U.S. banks is about 18 trillion. 1% is 180 billion. This is 26 times what the USA currently spends on silver and gold, which is only $7 billion. The entire world annual gold market production is about 75 million ounces. The USA buys only 2 million ounces of that. The USA spends about half on silver and half on gold. What if that continues? Well, if the U.S. spent $90 billion on gold at $1,700 an ounce, that would be 53 million ounces. Clearly, that kind of new demand would push up the price, probably to triple the current price, taking the gold price to $5,100 an ounce. For silver, $90 billion at $35 an ounce would buy 2.6 billion ounces. But here we have a major problem. World silver production is only 0.7 billion ounces, or 700 million ounces. Furthermore, there is no large above-ground stockpile of silver, as most has been consumed by industry, and furthermore, most of the silver market is already being consumed by industry, leaving very little left over for investors to bid over, which is only about 150 million ounces left over for investors. But let's assume that the industry gets squeezed out, leaving 300 million ounces available for investors who wish to spend $90 billion. This gives us an easy calculation for the price, which is 90 billion divided by 300 million, or 0.3 billion. So 90 divided by 0.3 equals $300 an ounce for silver. But those numbers are extremely unrealistic. Only 1% spending money on silver and gold? Really? Not likely. It's likely to be far more. Conditions of inflation are only likely to change when interest rates are as high as the annual increase in the silver and gold prices, which are above 20% per year. After all, why earn 1% in bonds if you can earn 20% in gold? Second question, what if 10% of the money in the USA were to be spent on gold and silver in a year? This would be $1,800 billion. Half into gold would be $900 billion. With the world annual production of 75 million, if the U.S. bought half of the world production, that would be only 37.5 million ounces. 900,000 million divided by 37.5 million ounces is $24,000 an ounce for gold. If 900 billion were to be spent on half of the world's annual silver production, that would be only 350 million ounces, which would lead to a price of $2,571 an ounce for silver. Third question, what if 10% of the money in the world were to be spent on gold and silver in a year? World money is about 60 trillion. 10% would be 6 trillion. If half were to be spent on total world gold production, that would be 3 trillion spent on 75 million ounces, which leads to a price of $40,000 an ounce for gold. If 3 trillion were spent on 7 million ounces of world annual silver production, that leads to a price of $4,286 an ounce for silver. Now, the interesting thing about rising prices is that they tend to attract more money because everyone wants in. People today who think silver is expensive at $35 an ounce will be scrambling to buy silver as it just keeps relentlessly climbing for two reasons. First, they will recognize that dollars are just used paper, like newsprint, and they will be fearful to hold them as their values just keep going down, and fast. Second, they will want to become wealthy, and they will see that the only way to do that is through owning real wealth of silver and gold. So this leads us to the inevitable question, the fourth question, what happens when the entire U.S. money supply is spent on silver and gold over a nice slow pace of over an entire year? Now think about that again. This is still well before hyperinflation really kicks in, well before people are spending their entire paychecks on silver and gold the instant they get paid, and well before the government starts printing new money with several more zeros on the end of it. So the fourth question, what if 100% of U.S. money is spent on silver and gold in a year? 18 trillion or 18,000 billion, half for gold is 9,000 billion spent, say, on 2/3 of world gold production of 75 million ounces would be 50 million ounces. 9 million spent on 50 million ounces leads to a price of $180,000 an ounce for gold. And if 9,000 billion is spent on 2/3 of world annual silver production of 700 million ounces, which is 467 million ounces, that would be $19,272 an ounce for silver. But let's assume the U.S. government tried to prevent that from happening. Let's assume that the government would be smart enough to back all U.S. currency with the official U.S. gold at a rate that would give the dollar a 100% gold backing. I know, kind of crazy assumption to assume that the government would be smart, but let's assume anyway. The point of considering these numbers is that in theory, the U.S. government could stop runaway inflation with a 100% gold backing and a balanced budget. But given today's political climate, that is currently impossible. But let's say the Tea Party wins a full sweep of both houses of Congress and we get Ron Paul as president, and let's assume that instead of trying to return the gold standard, he tries to simply prevent runaway inflation with a full 100% gold backing of all U.S. dollars in U.S. bank accounts. It's a very simple calculation. 18 trillion divided by 261 million ounces of official U.S. gold is $68,966 an ounce. Given the previous calculations, silver could hit a 10-to-1 ratio to that, which would be about $7,000 an ounce for silver. This is what the gold and silver prices should be, given the givens of honesty and living up to the basic pledge of FDIC government insurance on all bank accounts. But finally, many people reasonably expect that the U.S. has already sold off a lot of the official gold to protect and defend the dollar at current low gold prices, which is more consistent with government reality and stupidity and rising gold prices. In that event, the dollar is like burnt toast, and there will be no stopping the coming runaway gold price increases. The reality is that we live in an age of deception because the dollar is a deception. Over the entire last 12 years of the gold bull market, our prices for gold and silver have never been lower, etc. He goes on to his Mint site, so you can visit that if you want to. So, a very good summary of the money that's out there and the metals that are out there. And so, this is where I wanted to segue into the main topic, and that is mind control. Now, the reason why we have to have mind control is that we've already summarized the amount of dollars that are out there, and we know the amount of silver that's out there, or gold, the metals. So how do they keep these dollars from flowing into these metals? And the answer is mind control. So I'm going to summarize some of the strategies that they, whether you call it the powers that be, the banksters, pinstripe bandits, Wall Street criminals, government, whatever you want to call them, the enemies of precious metals, how do they keep these dollars from flowing into these metals? And it's through mind control. Now, I've outlined the major ways that they do that, and these are discouragement, diversion, duplicity, delay, doubt, denial, and dumbing down. So I'm going to summarize these and explain them to you fairly briefly here because I don't have time to explore all these topics. I've explored most of these topics in individual commentaries, but I'm just going to summarize them here. First of all, let's look at discouragement. Now, of course, the primary discouragement is volatility. When you look at the silver price, and you'll hear many pundits and people on Wall Street and people on CNBC tell you that silver's just too volatile. It's such a volatile market. Well, as Jason Hommel has asked in the past, why? Silver annual production we've seen from the Silver Institute is fairly steady, and silver use is fairly steady. It's a mined resource. Those things can't change dramatically. Now, we did have historically the Comstock lode. We also had the discovery of Central and South America by the Spanish. Those types of events can cause very violent price changes in the precious metals because they have a very large impact on the supply. But we don't have any of those events occurring today, mainly because the easily mined resources have all been discovered and mined. So we're not seeing major supply shocks coming into the market, and we're not seeing major rushes of money into the market. So again, the question is, why is silver so volatile? And back to the answer, of course, is mind control, discouragement. The purpose is to discourage you from investing in silver by making the price violently swing up and down and to scare people away from it. Now, the other element of discouragement that I'm highlighting here is VAT. That's the VAT tax. In Europe, it's as much as 19% to buy silver. It's not on gold, it's on silver. In the US, you have various sales taxes. A lot of those are avoided by shipping it in from out of state. I don't know how long that's going to last. That's another reason to stack silver as soon as you can. So before anyone's gotten into silver, and I've done these in order of people breaking through the mind control and what hits them at that point. So the first one is discouragement. They want to discourage you from getting into silver at all. So if they fail at their discouragement, then they're going to try diversion. Now, diversion is going to be trying to get your dollars, which are you're trying to make them flow into the metals, but they're trying to divert you away from them. And the way they do that is they have things like ETFs, futures, and allocated and unallocated accounts. These all amount to paper silver. People who think they own silver really don't own silver, or it's definitely questionable whether they own silver. If you remember my expose on Something Fishy Part 2, I showed how the European bullion banks and the world ETFs claim to have anywhere from 1 to 2 billion ounces of silver, but we can't find any way that they accumulated that. So it's very much under doubt whether the ETFs have the silver. The futures, of course, the COMEX, supposedly has vaults and vaults of silver, but is that silver really there? Is it really there at the LBMA? I doubt it. And then, of course, you have the Perth Mint and others all around the world that have these allocated and unallocated accounts. Jason Hommel has covered those in the past. It's definitely questionable. People have found it very difficult to get their metal moved from the unallocated to the allocated, and also to get their metal moved from allocated to shipped. And we'll deal with that when we talk about delay. So if they haven't discouraged you and they haven't diverted you, then the next one is duplicity. So you're going to call in and you're going to want your physical metal, but through duplicity they're going to keep you from getting it. We've got the MF Global scandal, and you remember Mr. Salente was going to take delivery of his gold, and he was stopped because of the duplicity of the people who stole the money in that firm. You have the scandal with Goldline and the people who call in and they intend on buying physical metal, but they're through, it is alleged, I will say, I don't want to say it's true, but it is alleged that they have been diverted by various investment schemes, trying to push them into futures, trying to push them into rare coins, trying to push them into something else other than what they called about. So if they're not discouraged and not diverted and not tricked through duplicity, then of course the next one is delay. So when they go to the sites and they look for the silver, it's out of stock, or it's delivered in 4 or 5 weeks, or there's a shortage, or the mint has shut down and is not issuing new this or new that. Now, I've covered the delay and the shortage and the bottlenecking that occurs in the silver market, and obviously it's not a real market. In real markets where people make real profits, things like bottlenecks are overcome very quickly. Silver has been in a bottleneck situation since at least March of 2008 and probably before. So bottlenecking and other tactics are ways that they keep the silver delayed from you actually taking delivery, and that is another form of discouragement. Now, once you have gotten through all of these and you've actually purchased your physical metals, of course, the horse is out of the barn at that point, and that's when they come in with doubt. And that's when people begin to doubt their purchases, doubt their investments, doubt making future purchases and investments, and there's a number of tactics that are used there. First of all, mocking. So you see this all the time. You see people mocking silver investors. You don't really see much coverage in the press, but you have your shills and your trolls that come on the various channels. I'm very fortunate that my channel, for the most part, has been spared that, but various others, Da Vinci and I know SGT Bull, have been attacked by shills and trolls, and of course that is to get people to doubt the decision that they've already made, and to get people who are about to make that decision to keep them from making that decision. So there's various attacks, and again, these are all mind control, but there are various attacks to keep people who have decided on investing in physical silver from continuing on that path or getting them to abandon that path. Now, after they have invested in physical silver and they have begun stacking, and they're stacking on a fairly regular basis, one of the big discouragements is the returns are not acknowledged. It's denial. So if you remember, and I've covered this, last year silver returned 86% for the year. It was, as far as asset categories, it was the top performing asset category for last year, as well as the year before and the year before that. So silver has returned better returns than any investment pretty much in the history of the world, except for some strange stocks and stuff that blows up and goes down and crazy stuff like that. But for year after year returns, silver has been the absolute king of investment returns. Now, this is completely denied by the press. The only time that the press ever covers silver is if there's a smackdown and they want to talk about it being a bubble. But they do not cover the consistent investment returns that silver has made year after year after year. Now, before this recent smackdown, silver was up 12% for the year. I think gold was up 25% for the year. I fully expect that silver will probably bottom this year. I doubt it's going to keep falling this year. We'll probably end up with maybe a 10 or, if we're lucky, 20% return. Of course, that's better than any paper instrument, but it doesn't really matter because it's physical silver. So, and then the last one that I want to cover is dumbing down, and that is just general ignorance of what money is and how over the course of many years they've dumbed the public down so that they don't really understand money. And the way that I've chosen to demonstrate that is just, don't get thrown off by the dates here because they're not consistent, but I've decided to just cover the change in the $10 bill. So let's start with this first bill, and you'll see conceptually the difference that we have here. Just a bill that I pulled off the internet. And if you look at the language, now, most people don't know what the term dollar means. The term dollar is a unit of measurement. So, for example, take the inch. The inch is a unit of measurement. So you may have inches of this or inches of that, or feet of this or feet of that, or yards of this or yards of that. It would make no sense whatsoever to say, wow, I just purchased 1 inch. People would look at you and think you're crazy. Same thing with the dollar. It literally makes no sense to say, I have $1. That's like saying, I have 1 inch. It's a nonsensical statement. But I'm going to show you how they've changed that slowly over the years. Now, if you look at the bottom of this $10 note, it says $10 payable in silver coin to the bearer on demand. So it's $10 of silver. Now that makes sense. That's a statement. And the US dollar actually has a definition. You have to go back to the Coinage Act, which defines how many grains of silver is a dollar. And this paper note represents $10 of silver. So that actually makes sense. It doesn't make sense to hold this note if you don't know the silver's backing it. But of course, in the past, you could simply take this note in and turn it in and get your silver. So that's the first understanding that people had, and that makes sense. Now, when we go to the next bill here, you can see that the language has changed subtly. It says, will pay to the bearer on demand $10. Now, it doesn't say anything about silver, but it does imply that this is a note, that this is a redeemable note, and you can see the language up here, redeemable in gold on demand. So this is a gold note, but same thing with silver. So the idea here is this note is redeemable, that the dollars represent something. Now, let's go down to what we currently have. This is your current money. It says $10. So the money that you currently have is nonsense. It's meaningless. They've literally changed the meaning of the words. What this is a piece of paper that says 10 inches or 10 feet, $10, a meaningless statement. And the only thing that supports it is this note is legal tender for all debts, public and private. So it's debt and it's dollars. That's all you have. So that's the change. That's what I mean by dumbing down, by actually changing the definition of a word so that a unit of measurement becomes a thing in and of itself. So these are the strategies that they use. They have to use these because, as I've covered with Jason, there are so many dollars out there that even if a small percentage of these dollars start flowing into silver, then it's game over. So they use mind control and all of these tactics to keep this from happening. But of course, people are waking up with my channel and other channels. People are slowly waking up, and with the disasters that we're seeing reported on a daily basis, people are thinking very hard about these things, and of course the only answer is going to be the precious metal. So more and more are slowly waking up. So this weekend is another opportunity to stack silver. Don't let them discourage you with discouragement, diversion, duplicity, delay, doubt, denial, and don't let them dumb you down. Just keep stacking physical silver.